Hello and welcome to Market Open Direct Connect, a webinar series for companies to tell their story, why it's compelling, and why it's an opportunity to invest. I'm your host, Stuart Walters, and we're joined here today by Richard Maddocks, the Managing Director of Kingsland Minerals, ASX code KNG. Richard will focus in on the company's Leliyn Graphite Project in the Northern Territory, and after the presentation, we'll participate in a Q&A. So if you do have any questions, you can submit them via the Q&A tab at the bottom of your screen. I'd like to introduce our guest, Richard. Welcome to Direct Connect, and over to you.
Great. Thanks very much, Stuart. It's great to be here talking to people about the Leliyn Graphite Project in the Northern Territory. Look, I'll start this slide here with a bit of an overview of what I'll be talking about. Like I said, our focus is on the Leliyn Graphite deposit in the Northern Territory. I'll talk about the project there and our recent announcements regards mineral resource estimates and exploration targets. We'll look a bit at the geology there and some of the metallurgy too, with the recent test work which produced flake concentrate up to about 94% grade. I've got a bit of a description of the graphite market. It's interesting what's happening there at the moment with regards to international movements and aspects of that, and also a bit of a corporate update too on Kingsland and what we're doing and where we are right now in the market. So we've recently announced a mineral resource estimate there. It's 194.6 million tonnes at 7.3% TGC, which is total graphitic carbon. That makes us the largest deposit in Australia and a globally significant deposit. And that was done after about 12 months worth of drilling. We announced the initial, let's call it the discovery of Leliyn in February last year. So it hasn't taken us too long to build up to this significant sized resource. You can see here on this slide here, it shows us compared to our Australian peers, and we are, you can see there we're clearly the largest deposit in Australia. And the next slide shows us how we fit into the international scale there. And again, we're in the top 10 there as well. I suppose of interest with this as well is you look at the location of a lot of these projects. There's a lot of projects in West Africa, and there's one there in Central Asia as well. I think we're one of the few deposits which you'd in an OECD country, which you might be able to describe as a tier 1 location. And that's, we think, one of our attractions for this deposit. We also announced a couple of weeks ago an exploration target update. And you can see that target there. And that's in addition to our mineral resource of 194.6 million tonnes. So you can see there we've got an estimated between 700 million and 1.1 billion tonnes at between 7 and 8% TGC. It's just a continuation of the existing geology there. So we think there's a good chance that exploration drilling will realise those sort of tonnages and grades on that deposit there. So you can see there that the potential here is for us to be significantly larger than what we're currently saying. So we're already the largest one in Australia. We're already a top 10 deposit globally, with a lot of upside there with a bit more exploration drilling to expand that resource to be really a globally significant resource. Okay, just a quick note on our location. Again, like I said before, a tier 1 location. We're only located 250 kilometres by road south of Darwin. You can see there the access area is quite good. It's sealed highways nearly to the project area. It's got a long history of gold mining around Pine Creek, so there's a community acceptance of mining, and the local community is fairly supportive of what we're doing up there with our exploration. And there's, like I said before, there's been mining there for gold for 150 years, so it's not a new thing for the community there. We're located very close to the main north-south infrastructure corridor leading to Darwin, so we're less than 20 kilometres. Gas pipelines, railway lines, high voltage power lines, sealed highways. There's a small service centre there at Pine Creek for fuel and accommodation, etc., like that. So it's a great location there. And like I said, a tier 1 location, you can't stress that enough where we are. It's fantastic to be only a 2-hour drive south of the major port of Darwin, and that makes any future development and export of any products significantly easier than it is compared to some of the other areas that other projects are in. Now, just a bit of a note on the geology here. That picture there shows the contact zone there between a granite and also sediments. Now, some of those sediments have got high carbon content, probably due to algae and things like that in the original rocks when they were laid down about 2 billion years ago. The heat from the granites as it's intruded those sedimentary rocks has changed the carbon into graphite. So you've got this nice little zone on that contact there, averaging around 7 or 8% graphitic content. Now, we've only drilled out about 4 kilometres of that contact zone down towards the south, and that's given us our mineral resource of nearly 195 million tonnes. Up to the north there, it's totally untested there. We know there's graphite there in some historic drilling there looking for base metals, copper especially. And there is a little bit of test work there done on thin section work, which indicates there is flake graphite there. And you can see it outcropping on the surface. So we're very confident that that's a nice continuous zone there, totaling about 15 to 18 kilometres of strike length. So there's a lot of upside there. And I think that's important too when you realise that as we go forward and develop this project, that gives us the flexibility to pick out the more optimal areas there. So we can hopefully pick out the better flake size perhaps, or better recoveries and things like that. So it does give us the scope to optimise the project as far as mining and processing scheduling goes in the future. Sorry, wrong way. There we go. That's a bit of a highlight of drilling from last year. That's that mineral resource area highlighted in the yellow dashed lines there. You can see what's very broad sections of good grade. It's consistent along that strike there. You can see that yellow zone out towards the western side where it's outlined here. That's a very homogeneous zone of high-grade graphitic schist. That extends to the north into the exploration target. There's a section line through here in the middle here, which just shows what it looks like in cross-section. And you can see there, it's about 100 metres wide on the surface. It's steeply dipping, and it's very continuous along strike and at depth. I've highlighted there in that pinky purple colour, the high-grade zones there. So you can see, given the geometry of the ore body and how wide it is at the surface, it obviously suits itself to very cost-effective open-cut mining. And also, given you have got some consistent zones of higher grade mineralisation above 10%, that we can target those things for any initial mining target. So you can imagine there, as we go through and develop the project, if we can prove up economic viability, that you can see that we can target the high grade areas. And even though the resource grade might be around 7.5%, initial mining targets, we believe, can be a lot higher at greater than 10% and probably averaging 10 to 11%. So we've got that ability to pick out the higher grade areas. And again, as you can see there, very low strip ratio for the first stage of the mining scenario there. So it lends itself to very cost effective mining, which I think will be a strength of this project as well as its location. Now, just a bit of a talk about the graphite market here. I get a lot of these questions when I'm going to conferences and talking to shareholders or potential shareholders here. The main market going forward now for graphite, especially fine flake graphite like we've got, is the EV battery market, the batteries for electric vehicles. You can see in this schematic picture there that there is more graphite in an EV car battery than any other material. It averages around 50 kilograms per battery. Most people, when they think about car batteries, think about things like lithium and cobalt and nickel. And you can see that lithium and cobalt especially are very small contributors in the total weight. So graphite is a large contributor there, and the increase in the use of electric vehicles is what will drive the demand for graphite going forward, and also the price as well. There's a couple of pictures here on EV growth in the last few years. This is world sales of electric vehicles. You can see there it's growing at a strong rate. The colours there are China, Europe, USA, and the rest of the world at the top there. You can see that China's been the driver of most of the increase in the last few years. As you know, they've got very large manufacturing facilities there, putting out a lot of electric vehicles, and there's a very strong uptake in the local market there. A little bit of a slower uptake in other markets in Europe and the USA and Australia. But I think as you see the charge times in these batteries increase, the charging infrastructure comes up as well, and the range of the batteries improves, I think you'll see the EV take up further increase as well, obviously adding to the demand for flat graphite. The next slide shows you a picture of Australian electric sales in the last few years. You can see there's extremely strong growth in the last 4 or 5 years. There's a big pickup, especially in the passenger vehicle market. About 20% of vehicles sold down Australia, passenger sedans, are electric vehicles, and that's only going to increase in the future going forward. Now, I do get asked a couple of questions about EVs. It's the main demand for graphite going forward is electric vehicles, and there is a little bit of, I guess, questions about some of the EV sales going forward and things like that. You can see here this is monthly sales of EVs. I think you do see fresh reports of slumps in EV sales and things like that. You can see that this graph here is the last 2 years, and it's in two halves, really. You've got 22, 23, you saw very strong growth in EV sales, and then it's evened out in the last 12 months, 23 into 24. But you can see it's also significant variability. So you do get months where you do get a significant reduction in sales, and that's followed by a month with a significant increase. So I think, you do see press reports that there's been a slump, but then obviously the next month that slump's taken up with an increase and things like that. So I think going forward, we will see an increase in EV sales in Australia and in other Western markets. I think if you look at the cars coming out of China now, they're extremely cheap. The quality is improving, range is improving. And I think that growth will see the EV vehicles take off stronger as projected, and you'll see a lot of demand for graphite going forward. Just as an aside, another question I get too is, but don't they always catch on fire? I think they don't catch on fire. EVs are very safe. You can see there, this is from a parliamentary inquiry in New South Wales. There's only been 6 EV battery fires in Australia, and those fires were all caused by accidents and damage to the battery. So they're very safe cars. I don't think there's any question that we'll see a significant pickup in the demand for EV vehicles in Australia. As I said, as the charging infrastructure improves and ranges also improve as well. So that's the growth for the graphite market going forward, is essentially on the EVs. You can see there, this graph here shows the growth of the proportion of the graphite demand that is made up of electric vehicles. Right now, it's around half of total demand goes to the electric vehicle market. In another 6 or so years, in 2030, that demand is meant to be 80%. So 80% of flake graphite demand will be from the car battery market, from 50% now. So obviously, you can see that we'll need a significant increase in supply to meet that demand. And that also ticks into another interesting area of the graphite market, which I'll go through now. You can see there is where it comes from. You can see here that on that graph on the left-hand side there, that China produces around 2/3 of the world's raw flake graphite at the moment. So they're by far the largest single producer in the world. But more importantly, they produce 99% of the spherical graphite. So that's the processed graphite, which is a precursor to go into a car battery. So they produce nearly all of that around the world now, with a small amount made in other parts. If you look at the last bit there, the natural graphite anode, again, China produces 80% of that. So that's what goes into your car battery. South Korea and Japan are the other two major producers, but obviously they source their spherical graphite from China. So the market is totally dominated by one player, and that's China. I think you'll see now that other markets around the world want to diversify away from that single source. And obviously to do that, you need other sources of graphite outside of China. So I think projects like ours in the Northern Territory will be very attractive to consumers and manufacturers of batteries outside of China. And I think going forward, once we advance the project, we'll see a lot of interest there as well. Now, the graphite price, again, given the fact that it's dominated by a single player, obviously the graphite price has got significant variation as well because of that. And this graph here is just it's a natural flake price index. So it's not an actual a raw price, it's just an index, but you can see how variable it has been over the last, say, 10 years or so, with ups and downs. I'll put a couple of little points there. You can see, Balama, owned by Syra Resources, is the world's largest graphite deposit in Mozambique. It's an Australian company. You can see they put that into commission at a nice price high in about 2017. The price slumped a few years later, and they had to put it into suspension, and they're back operating now. But you can see how it's a very variable market, a bit of a roundabout on prices there. So I think as the market matures, it goes away from the single source of China. I think you will see markets stabilise to a certain degree, and pricing will become a bit more transparent as well. So you can see at the end of that graph there, I've put in the Chinese have also introduced export controls. They did that late last year. And right now we announced our maiden resource in March this year. So you can see here we're at a historic low for the graphite price. So obviously we project that the price will improve based on increased demand. So it places us well to develop this project and hopefully be in a position to take advantage of price hikes in years to come. Our metallurgy, we're doing metallurgical test work for the last few months. We've got some positive results, which we announced to the market a few weeks ago. We've managed to produce a commercial grade concentrate of 94%, which is what you want to be able to sell to international markets there. There's more test work going on now to optimize the flotation flow sheet there. And once we do that, we'll produce a sample of concentrate, which we'll ship off to Europe, and we'll get tested for the applications for downstream processing into spherical graphite, which is what's used into batteries. Now, it's ours is a predominantly fine flake graphite. Most of it's below 75 microns. That's what you want for battery use. The historic use for graphite was industrial applications, where a very coarse or jumbo flake was preferred. But for batteries, you want a finer flake. So I think we're well placed to supply for that market there. So we'll do more test work later this year or early next year, and that'll work out the final downstream processing route, and we'll work on from there. Now, once we get that sort of finished, there's sort of a two-stage development scenario we're looking at here. The first stage is to deliver fine flake graphite to Darwin as cheap as we can. And I think given the characteristics of the ore body, the size of the ore body, and also the mining potential as well for cheap open cut mining, I think we're well placed to be able to achieve that. We can deliver very low cost graphite to Darwin. We're going to hopefully use some nice green energy sources to do that as well. And once we get that flake graphite in Darwin, the next step is to hopefully do some downstream processing there as well. So it might be a combination of export some of the flake and also do some downstream processing. But hopefully the aim is to do as much as we can in Darwin as well to manufacture some processed graphite products in Darwin. You can see there we're very well placed for Asian markets. We're especially close to South Korea and Japan, who we know are consumers of graphite products for battery use. And we're also not far away from the west coast of the USA and Europe as well. So I think we're well placed there to be able to supply graphite products to the rest of the world. So just a bit of a sum up there what we've done so far to date. We've had great success in our drilling programs, our initial drilling programs. We've got a nice large inferred resource. We'll do more drilling hopefully later on this year to upgrade some of that into indicated. We've done some metallurgical test work already, which indicates we can produce a good grade concentrate at recoveries of 80%. The next stage is now to do some more advanced test work, as I mentioned, to assess the viability for the end use there and electric vehicle battery use. At the same time now, we're progressing some of these mining studies. We've commenced the work behind a mining lease application up there as well. We've already had some preliminary discussions for offtake negotiations as well, which is interesting, even though we're at such a very early stage compared to our peers. And it's worth noting that because we're such a new discovery, we're several years behind most of our peers in terms of test work and offtake negotiations and things like that. So we've already had people approach us regards offtake, which is encouraging. And I think as we de-risk the project going forward, we'll have a lot more serious discussions in regards to that. And also going through the process of designing mines and plants as well, which we're sort of commencing the preliminary work for that. So just a bit of a highlight on the company there. We're a new company. We've been listed for about 2 years. So we've only got 60 million shares on issue. Our market cap is only about $10 or $11 million, or say $12 million, depends on the share price. We've been bouncing around the low 20s the last few weeks. So look, we're very reasonably priced, I think, given what we've got here as an asset. There's significant growth potential for the Leliyn Graphite deposit to supply flake graphite. And I think as we de-risk the project there, you'll see those dynamics improve significantly. It's very tightly held. The 3 directors own 20%. And directors are also associated with Trafalgar Resources there, which owns another 6%. So it's tightly held and not many shares on issue. And with a good project there, we believe there's significant upside on the share price going forward. So just to summarise what I've just said there, we've got a nice large flake graphite deposit in a great location, 2 hours drive south of Darwin. Tier 1 project in the Tier 1 location. The world wants more graphite. Demand will increase, price will increase, and I believe that we're very well placed to take advantage of that. And like I just said, given our current market capitalisation, I think there's significant upside there to grow the project a fair bit. So look, if there's any questions from anyone, please ask them, and I'll be very happy to answer them. So thank you very much.
Richard, fantastic presentation. Clearly an exciting time ahead for you and the Kingsland team. We have had a few questions come in. First one being, you've recently released an updated exploration target of 700 million to 1.1 billion tonnes at a grade of 7 to 8%. What does this mean for the future development of the Leliyn Graphite Project?
Well, look, I mentioned that briefly in the talk there. I think the important thing is economies of scale, I think, are very important in these sort of projects and in this sort of material. Given we've got a very large project, a very large deposit outcropping its surface, I think the larger the resource, the better, because it gives us the flexibility to be able to pick and choose the best product to mine and to push that forward in any potential mining schedule. I think it's the strip ratio, as you can see from a 100-meter wide ore body, will be extremely low. I would suggest it'll be under 1 for at least the initial period of mining there. So that's part of the plan to be able to deliver flake graphite to Darwin as cheap as possible. It's very important that we're cost competitive with other producers around the world. And I think that the ore body size and the ore body geometry gives us a great start in that. So it's very important in considering the cost going forward of the mining costs, that we should be able to produce graphite fairly cheaply.
Recent metallurgical test work indicated a fine flake product. What is the significance of this?
Well, look, I get a lot of questions about the size of the flake. I think there is still a perception that everything has to be coarse flake. The coarser the better, and that's true as far as pricing goes. Coarse flake graphite, well, coarser jumbo flake graphite and coarse flake still attract a premium price. They're still a required commodity into industrial processes, and obviously they're the rarer. It's the harder to find type of graphite, the coarser flake. I think in years gone by, finer flake deposits like say what we've got, that probably weren't desired or worth that much because you couldn't sell the flake for that much. But given the demand going forward for fine flake for batteries, I think we'll see a change in that. And it's just worth noting too that part of the process to make the spherical graphite, it's the first process after the flotation to produce a flake product is micronizing. So you actually break up the flakes to make them smaller, so they're more amenable to making the small spherical spheres. The spheres that are used in the batteries are only 10 to 15 microns across, so they're very small. So you can't have large flakes of graphite producing those size flakes, so you have to break it up. So if you start with the finer flake, it's more cost effective on that process to make the spherical graphite. So our flake graphite, we haven't done much work yet. What we've done indicates it's all below 75 microns, so it is a fine flake. But like I said, in that first question there with the size of the deposit, we can probably go through at some stage and work out where there are optimal areas there of coarser flake and finer flake and try and pick those out and optimize the end product.
We've had a question coming around the uranium tenements. What's the plan with the uranium tenements considering the uranium supply and demand dynamic at the moment?
Well, look, yeah, that's right. We listed on the uranium tenements about 2 years ago. We drilled them out. We've got a resource there, inferred resource of a bit over 5 million pounds of uranium oxide. So look, at this stage, they've been taken off priority. Look, it's still there. Our focus is on the graphite. We believe that the graphite has got the potential to be more of a company maker than the uranium. But look, it's still there. I think, we're tracking the uranium price pretty closely to see what happens with that. We have investigated options of that project, and obviously, divestment is one of them, or JVs and things like that. But it's something we're not working too hard on at the moment. Our focus is well and truly on the graphite, but we haven't forgotten about it, so it's still there, and I'm still pretty keen to extract a fair bit of value out of that for the shareholders. And I think, given the forecast for the uranium market, it's something we should be able to do in the future.
The presentation said about $1.8 million in the bank. How long is the company funded, and is there any plans for a future cap raise?
Well, look, any junior company has got plans for a cap raise, so there's no surprise about that. Yes, we've got $1.8 million. We are drilling at the moment, so our cash burn is fairly slow. But look, yeah, that's part of the plan going forward. We're going to have to raise more money. There's no doubt about that. You don't need a degree in economics to work that one out. So it's just a matter of timing when we do it. And we don't have to at the moment, but it's something we're looking very closely at. That's for sure.
And there is one more that's come in. What is the projected news flow over the next 6 to 12 months?
Okay, look, we're looking at. I'm up on site next week. Hopefully, we'll get some drilling done this dry season, and that'll get us a inferred resource on part of the project. Once we've got that inferred resource there, combined with more test work, we should be able to look at commencing some economic studies there. So look, I think the test work for say the next 6 months for 2024, we'll get some more test work results. We'll finalise the flotation process. We'll generate a bulk sample of concentrate and send it off to Germany for test work. We'll have drilling results from the infill drilling. We'll have an updated resource, maybe later this year. We'll wait and see when we do the drilling. I've indicated, some indicated resources as part and plus inferred, and that'll enable us to commence. Look, we're not sure how we'll do it yet, but we can start a scoping study perhaps, get an idea of capital costs and things like that, and that'll be probably the bulk of the work for next year in 2025. We'll be really trying to monetize this project and to see what it can do.
Richard, that's all the questions that have come through today. For more information about Kingsland Minerals, you can head to the company website, kingslandminerals.com.au, or you can follow the company's social media platforms. Thank you for attending. Thank you for attending today's webinar. I will keep you all updated on any future opportunities. Richard, wishing you all the very best. Keep up the great work, and we look forward to chatting again soon.
Thank you very much, Stuart. It's great to talk to the shareholders there and potential shareholders hopefully as well. And yes, there's a fair bit of news coming up now, so it's an exciting time for Kingsland. So, please keep your eyes on KNG. Thank you.
Thank you.